we'll look at a brief introduction, a very, very brief overview of global markets. Then we're going to look at Mansa X, an introduction to Mansa X, and now you can actually use the fund to diversify your portfolio. Just a minute, we want to admit a few guys who are in the waiting room. Victor? Can see 5 people. Let's admit this. Great. I would urge everybody to keep their microphones muted so that we can have a smooth running of this session. And then we will end up, you're allowed actually to chat, ask your question via chat function on Zoom, and then we'll be able to answer those questions as they come. So you'll be responded to in real time, and you can also preserve questions for the last of the end of the session, and then we'll be able to answer them and we'll be able to proceed forward. So welcome and thank you for joining us. So what are alternative investments? These are any investment in assets that are different from cash, stocks, and bonds. And I'm sure everybody in this session has interacted with these 3 major asset classes, both maybe some stocks in some way, bonds, like the recently concluded infrastructure bond, and of course, cash and cash equivalents. So alternative investments are basically more complex and less frequently traded than public stocks and bonds, and they give investors access to additional sources of income or better returns. So there are 2 broad classifications, so to speak, for alternative investments. There are tangible alternative investments such as precious metals, fine art, wine, antiques, and private real estate. Those are actually the actual commodity. And if you talk about gold, it would be like actual gold. They are tangible in nature. And intangible alternative investments, these are such as hedge funds, private equity, venture capital, and derivatives. So why choose alternative investments? Or why include alternative investments in your investment portfolio? You get to enjoy a host of benefits, and some of them you're able to boost your returns, counterweight to conventional assets. So there is a little or no correlation risk, because when the traditional asset classes are not doing so well, you realize the alternative investments are doing well. So there is no correlation. And therefore, this serves as a very good diversification tool. So it's also to hedge against inflation. You realize that if you just invest only in traditional asset classes, let's say, for instance, you put in an FDR or something, or a government bond and everything in that line, you realize that you get a return of maybe 9%, 10%, 11%. So when you look at the rate of inflation, for example, the current inflation is around 6%, that one leaves you with a very low effective rate of return. And therefore, when you now employ alternative investments in your portfolio, you're able now to be able to hedge against inflation by realizing the returns that are above market average. Of course, portfolio diversification from traditional investments. And this does not mean that you migrate completely from traditional investments. The essence is to strike a balance between these, amongst these aspects. First of all is risk, liquidity, and return on investments. So you realize that when you strike a balance, you're able to realize your mitigate risk, and therefore you're exposed to moderate risk, high returns, and high liquidity, which are very attractive aspects to any investor. So let us have a brief at global markets. Global markets is basically a 24-hour market. That means you fund or you're making money even when people are asleep, when you invest, because the whole world is not asleep all at one given moment. So when some markets are closed, other markets are open, and that ends the 24-hour cycle. And these are the various major markets, New York, London, Moscow, and Tokyo. Basically, we operate in those regions. There's the Asian markets, Europe, and the Americas. So look at the Forex market. If you look at its average trading of daily trading volume, we're talking about 5.3 trillion US dollars per day, every 24 hours. That's huge liquidity. So the online trading foreign exchange market, FX, and OTC derivatives is a market in which currencies are traded 24 hours every day and considered to be the largest market, boasting to at that 5.3 trillion per day. That gives you a lot of liquidity and also presents you a host of opportunities to take trading positions and be able to realize very good returns. So this is the structure of the Forex of the market, the Forex market hierarchy. There are major banks, then big interbank networks, small interbank networks, and then all the way to the retail trader. And this is why you realize, like before the regulation, there were over 50,000 unregulated traders. And actually that's where you find some of them actually dealing in that space. And the essence of us existing as Mansa X is as a result of the regulation that came in 2017. And this give us a very good opportunity now to be able to do this in a very structured manner. This is not a very new concept. It may be a new concept to some of us, but this has been in existence for the longest time. Only that now it came in the limelight with the advancement of technology and adoption of internet connectivity. So at Mansa X, the CIB Global Markets Division, we provide exposure to global markets through our funds. Our flagship fund is called Mansa X. Some call it Mansa. It can even be Mansa X with exponential X thereabout. And what that X means that we're able to give you exceptional returns and provide you with exponential growth on your capital. So we also create hedging solutions for existing investments. We take discretionary trades on behalf of our clients. The asset classes exposure include currencies, as the G10 currencies and emerging market currencies. We are talking about over 100 currency pairs. Stock indices, we are going to look at this at greater detail when we look at Mansa X fund, precious metals and commodities. So what is Mansa X? This is a global multi-asset strategy fund. We've talked about global markets, yeah? So we talk about multi-asset. We have exposure to over 250,000 assets that we can trade in, and with stocks accounting for about 8,000. With a long-short trading model, what does it mean? That your fund is able to generate returns whether markets are going up or they're going down. And this is the strength of our fund. We're able to take positions, short positions when markets are going down and long positions when markets are going up. For instance, when there's a lot of market turbulence, there's tendency for people now to start investing in gold. And what that does mean that the prices of gold starts going up. And therefore, if you're taking a trade, it means you're going to realize a return, depending on how high the gold goes. Another good example for short trading is what happened with oil. Pre-COVID, there's a point oil was at 46 USD per barrel. And during COVID, actually, it went to around negative 37. So any trader who had taken such a good, such a position, short position, made their very good returns. And that is where Mansa X actually is able to generate the exceptional return you've been seeing of an average of around 24%. So Standard Investment Bank is the first online Forex trading money manager licensed by the CMA. under the honoring Forex regulations of 2017. The fund enables you to have safe exposure to global markets through currencies. These are now the major asset classes that actually trading. G10 currencies as well as emerging market currencies. Precious metals as gold, silver, platinum, and palladium. Commodities, natural gas, oil, and coffee. There are global stock indices, S&P 500, FTSE 100, the German DAX, and Nikkei, Japan Nikkei. We realize that as an individual, because of the minimum investment required, as an individual, you may not be able to access those kind of asset classes. And therefore, with a fund like Mansa X, the license now enables us to run a collective investment scheme that enables you now to participate in global markets from the comfort of your home. Yeah. So these asset classes are balanced in a way. In itself, it's a diversification tool, and therefore, why we reach out to our investors to urge them to look at their current portfolio and be able to diversify maybe 15 to 20% of their current investment portfolio into the global markets. The essence is to be able to strike a balance between the traditional and the alternative investment solutions, and therefore be able to come up with a hybrid of a product that gives you more benefits. For example, if you look at the traditional asset classes, majority of them are low risk and they're of course low return and some moderate liquidity. Yeah, purely alternative investments, they are considered high risk, high return, and somehow illiquid. Yeah. So when you come up and combine now the two and come up with a product that is on a hybrid between the two, you're able now to realize a product like Mansa X that gives you superior returns, above average market returns. It also gives you exposure to moderate risk as compared if you just went only alternative investments. Yeah. And then high liquidity, because this is a very high liquid fund. We don't like buy, for example, real estate and start giving you stories that we have to liquidate these and all that kind of stuff. So it actually takes less than 48 hours to actually liquidate or to get back to cash in your investment. So this cash and cash equivalents, and that's now that one actually accounts for or validates the point about liquidity aspects. These are the fund features at a glance. To join the fund, it costs you nothing in terms of initial fee. There are some funds that will charge you an initial fee, and what that one leaves you is already with a dent into your fund that you have to start generating some revenue to get back to your fund before you even start getting your returns. What we charge you, the only cost we charge you is 5% annual management fee. And the good thing, we prorate this over 365 days. That one enables you actually to start with a higher investment amount as compared to if this was deducted on pro rata. These are very common question most of the investors ask. And that's why out of the feedback we got, people felt if it would be better if we deducted this on a pro rata, and we listened and we were able to offer that. So there is a minimum investment of 250,000. And for us, the way we look at it, this is not cast in stone like you must start with a minimum of 250. We normally look at what is your current investment objective, because that is the key thing. Not just to invest because it's 250, you just put 250,000 and that's it. We have to look at your investment portfolio. How is your current investment portfolio diversified? Is it diversified well enough? Do you have concentration risk? Like, have you put everything in bonds, everything in treasury bills, or everything in real estate? Or is everything in an FDR? You get my point? So we have to look at that and then ask, what is your investment objective? Do you need your money in the medium term, long term, or in the short term? And therefore, with that, now we're able to structure a portfolio that can be able to generate revenue for you to cater for those investment objectives. So every time you're seeking financial advice, it's always good. Don't just buy the product for the sake of it. You always have to look at your investment goals. And that's why setting goals, financial goals, is very critical. And therefore, Mansa X comes in now to be plugged in as a tool for setting or organizing and enabling you to achieve your investment goals. Some people come with, I want a fund to take care of my children's education. This is a good product for that. I want to augment my retirement income. I want to invest for my dream holiday. I want to move from where I work when I retire. I want to buy a retirement home. People have varied investment needs, and therefore we're able to listen. We have a team of financial advisors who work with our clients, and they're able to walk with them the journey and enable them be able to get the very best of the benefits from this fund. So far, fund has realized a return of 24%. We get mixed reactions. Some say 24% is too high. Then the question we ask ourselves is that, from what perspective is this person talking? When we analyze their current portfolio, we only realize that they are only used to traditional investments, that is stocks and bonds, or treasury bills. If someone says that and they have been investing in such, we understand them. Others will say those returns are too low. That means this is someone who has an exposure to alternative investments, and therefore we're able to understand where they're coming from. And therefore you realize that the fund now is structured in a way that we are not going to look at giving you very high returns that are not consistent. The fund is structured to trade very conservatively, to be able to realize a return that is consistent, a return that we can actually be able to move consistently with. Because what it means that if you stick with this fund for 4 years, for instance, basically you will have doubled your initial investment amount. Look at other investment options available. If, for example, you're getting 9% and then there is withholding tax deducted from there, and then there is inflation, it can take you a lot of time to be able to actually double or even get 50% of what you actually started with. So today's modern investor doesn't want to be kept 20 years, 30 years, or 15 years waiting for an investment to mature, because things are very dynamic. You want to take care of things as they come. The entrepreneurial nature of the Kenyan investor demands that they can access their fund anytime, because opportunities present themselves. And we say cash is king, but only king if it is put into very good use, if it is put in a fund that can enable access to it and be able to grab that investment opportunity that comes your way. So I'm just comparing with, for example, real estate. Not that I'm bashing real estate. Real estate works very well for long-term investments. But if anything comes like an emergency or something like that, and you want to liquidate it, you realize you're not able to realize true value from here, because you do what we call pressure selling. And if it is stocks, if you bought, for example, a stock from company X and you bought at maybe 30, it has gone to 15, and there's an emergency, it means you have to part away with the 15 units. That's a loss. So the good thing about an actively managed portfolio like Mansa X, it gives you an opportunity to be able to access your funds and still be able to realize a return way above the market average. So as at Q1 2020, that's the end of March, the return was 24.45%. We are ending Q2, and by the end of next week, we'll be able to release the report for Q2 performance. So we normally recommend, we don't tie you to a term for this fund. We just recommend a 6 months period for you to be able to realize something meaningful with the fund. Because again, you don't come and then 2 weeks or 3 weeks and then you want to access your fund. That's why our financial advisors are able to sit down with you and ask, what are your immediate liquidity needs? If you have immediate liquidity needs, we would advise you to put it in a money market fund or something like that, because you can actually access that fund maybe within 2 weeks. So, but 6 months period is just a recommendation. We don't cast it in stone. so that you can be able to realize some meaningful return on your investment. Yeah, we give you quarterly statements of valuations via fact sheet, that is updated quarterly. Then there's regular global markets commentary in terms of how the markets are behaving. And then the good thing about this fund, all the information is actually in the public domain. Listen to all the business news outlets, yeah, Business Daily, Bloomberg, CNN Business, MSNBC, CNBC. You'll be able to see how oil is going. If you go to investing.com, if you go to the various business news outlets, you'll be able to get to understand how the markets are performing. So there's that aspect of transparency with Mansa X. So when you invest in Mansa X, what's in it for you? What do you stand to benefit if you choose this fund? All these benefits are not just only unique to Mansa X. There are some other asset classes that will give you the same. But what we give you is a cocktail of benefits, yeah? Because if you look at the major asset classes we looked at, from currencies, precious metals, commodities, cash and cash equivalents, derivatives, yeah, for hedging solutions, this now brings a host of benefits if you are a Mansa investor. Yeah, you get a chance to diversify your current portfolio from traditional asset classes as equities, fixed income, and real estate. Basically, a typical Kenyan investor will have some fixed deposits with a major commercial bank. They will have some form of plot, the famous Kamuru, Joskar, somewhere there, an eighth, or they will, of course, buy some shares. Good examples: Safaricom, Equity, KCB. Yeah, they'll buy maybe with some bonds or some T-bills. That's a way of government raising funds, and that's it. So you realize that you are exposed big time to whatever happens locally. If the shares go down, you just wait for them. For that moment, they will ever go up. Yeah. In Kenya, you realize there is a 5-year election cycle, and most of the businesses end up being affected every 5 years. Like we reset to zero every 5 years. 1 year or 2 years to the general election, like right now, there are a lot of uncertainties. In even maybe 1 year after, that's when you realize people start now finding their balance and everything. So your investment cannot grow in just that kind of an environment. So you need to have a certain portion of your investment portfolio diversified into the global markets. We talked about the 24-hour market. These are dollar return. The dollar return now potentially adjust for case depreciation, like Kenya shilling depreciation and inflation. Yeah, it's sort of an hedging aspect against currency losses. So leverage, this we call it a double-edged sword, and the novices in trading have actually ended up losing a lot of money for the ignorant investors, because this is a tool that enables you to trade. For example, CMA allows 1 to 400. Like you can trade 1 shilling, you can trade like you have 400 shillings, and that is very risky for someone who doesn't know how to use it. So at SIB, we take a very conservative stand on how we use leverage. For example, 1 to 5 instead of 1 to 400, and therefore you realize that we are not exposed. Yeah, trading opportunities, whether the markets are moving up or down. This is the long-short strategy, the one I explained earlier, that you make money when markets are going up, markets are going down. Liquidity, ease of access of your funds at no extra cost. We don't charge you redemption fee. There are some funds when you want to exit, they will charge you redemption. So, for example, if you have an FDR, a fixed deposit in a commercial bank, if you want to exit earlier, what is going to happen? They are going to penalize you for that. Sometimes you may even lose the interest generated for that period. So this sets you free. We want you to enjoy the wealth that you've really struggled to build, and therefore your money should work for you, not you working for the money. So, good thing, local presence. So SIB is an indigenous investment bank. I mean, it's fully owned by Kenyans, and we're here in Kenya. We are not giving you stories. We have a physical address. We are located at Jaguar Tower, 16th floor. That's where the investment bank, that's where we are located. So we have both online money manager and online brokers based here in Kenya, and founded and incorporated here in Kenya. So you can actually pay us a visit, and we can be able to have a discussion on how we work on our portfolio.
Vision is where we want to go.
So how is risk managed? You cannot run a fund and not have a robust risk management framework set into place. And therefore, we have an investment committee. And if you look at the pool of our talent that manages the Mansa X portfolio, they draw a lot from commercial banks and basically risk management, running the treasury and all that kind of stuff. And therefore, they have come up with very stringent missions and come up with risk tolerance and limits to be able to operate only within the agreed limits. Yeah, they act with due skill and care as money manager at all times, preserve and enhance its reputation as a money manager. If you look at investment banks are actually anchored on reputation. An investment bank is what sits between, acts as a bridge between the investor and companies that are in distress or people who need money. So preserve, own as well as clients' assets. So we are also in the game. We don't just like say we put in just your money there, because this is a fund that before even it went public, we were in the same, yeah, before we let it to the retail clientele. So complying with applicable laws and regulations, being a regulated fund, we are always being audited to ensure that the fund is being run according to the investment objectives and be able to satisfy the investors' needs. So undertakes operation in an effective and efficient manner, active identification of risks and timely measures. Our trading team actually monitors the fund continuously. That's why we call it active portfolio management. To make sure, for example, if you have taken a position on oil and you realize it's not going your direction, you don't just sit there. You're able to exit the position and get to another profitable trade. That's how you're able to give you a return above market average. So manage risk across stakeholders, people, operational, administrative, and regulatory. So these are all centered around governance. Another thing is skill, experience, board and personnel teams, combined commercial banking of 20 years, treasury management of 25 years. That's what I alluded to earlier. IT infrastructure, very critical. To be able to monitor 250,000 assets cannot be done manually, and therefore we have advanced risk management software, data analytics, and insight-driven decisions that are made based on the IT infrastructure that we've set in place and taken advantage of. Yeah. So we also set limits for each trader to limit risk stop loss, intraday, night limits, and currency pairing. Limit currency pair exposure to limit excessive concentration. Take profit limit, daily reconciliation, and real-time monitoring. You realize some, for example, when talk about take profit limit, if this is agreed, even if it looks more potential, someone has to exit that trade no matter what, because you have to operate within. You can easily get greedy when you see the way the markets are performing and all that kind of stuff. So having a very well experienced team actually running the fund, those are the advantages that you enjoy. If you went ahead and traded for yourself, you don't have access to this kind of facilities. So trading methodology aligned to a maximum drawdown amount. The transparency aspect, we inform clients should the fund value fall to 75% with option to withdraw at zero costs. Yeah, and before we even get to that, there will be, of course, a mechanism of ensuring we don't even get to that aspect of the fund losing to that much. Yeah. So when you look at a comparison between, it may not be an entire comparison, but you can look at the 10-year Treasury Board, for example, and an 91-day T-bill. Look at Mansa X at 24% and Anton at 9%. Yeah, a 10-year Treasury Board at 12%. If you take a 10-year bond, are we talking liquidity anymore? As the government decides to buy back those bonds that they sold to you. So the fund outperforms the traditional investments by over 10%. Our objective is to always be above the market average. Always above the market average. And that is actually a major value proposition to our clients, because everybody wants to grow at a faster rate. You want your fund to grow. What I want to give you examples of, it used to take many years to make millionaires in the past. Guys like Rockefeller. And as time has advanced, we are making more billionaires within a shorter span of time. Why? Because of being able to take advantage of technological advancement and the opportunities and the business models that end up coming as a result of that advancement. So for example, Zoom. You realize that you went to take a flight to London, for example, for a business meeting and all that kind of stuff, take the first class and everything. But these days, for example, what we're doing here, we didn't have to burn our fuel to go to a central place and be able to meet. So these are the emerging business models that I'm talking about, that a fund like Mansa is able to take advantage of. And now we are presenting you an opportunity to be part and parcel of that movement. Yeah. So being able to double your investment within 4 years is quite tremendous and commendable, and it gives you still liquidity, access to your funds. So this is the fund performance. One of the highest returns in the market in Q1 2020 with an annualized return of 24.45 during COVID, when things were crazy. Yeah. And that is the nature of the fund. That's how the fund was actually designed. And I can say now the fund has been actually tested. We say gold is tested by fire. The fund has actually withstood. The fund actually feeds on what we call market volatility. When everybody is running helter-skelter, when we adopt a strategy and still remain with that strategy, of course, a lot goes into it. A lot of the technical research goes into it and all that kind of stuff. A lot of research goes into it to be able to remain with a strategy that enables us to get our return at the end of the day. So high return due to increased market volatility, more trading opportunities, with some asset classes making historical lows. For example, oil, now trading at an 18-year low. So when I talked about us taking a short position, you can see now why we were able to be able to squeeze such a good return. Drop in global stock indices amidst the COVID-19 outbreak. Yeah, the team also was able to short some of the indices. Mansa X uses a long short trading strategy to maximize return by short selling losing asset classes. Yeah, that one is not available for traditional asset classes, but for an actively managed portfolio, you're able to take long and short positions at your own discretion, and you're able now to. That is what sets you apart. So the barrier to entry to this fund is, as an individual, you because of the minimum requirement, as an individual, you're not able to do that. But Mansa now gives you an opportunity now to participate in this tremendous opportunity. I think I'm done with my presentation. I will be ready now to take your questions as they come. I'll be playing the screen over here. That's why I expect more questions to come from. Thank you so much. Any questions?
Thank you so much, Victor. I think a lot of people joined midway the presentation.
Yeah.
So yes, for those who joined midway the presentation, Victor is from Standard Investment Bank, that is SIB. He's been talking about alternative investments and how you can diversify your investments through Mansa X, which is a product that SIB have. I don't know whether, Victor, you can start by still introducing the product again, just a little. The minimum investment, I can see it on the screen. Maybe you can just tell people, for those who've joined via phone or via call, the average return for last year and why again Mansa X stands out as a product. Yes.
Thank you, Rosella. Thank you so much.
As the questions keep coming.
Yes, for those who have joined us midway, I wish to introduce Mansa X. This is an innovative investment solution from Standard Investment Bank. The product is actually a product of disillusionment by investors who invested in Forex and lost money, and because they didn't understand. Somebody took advantage of their ignorance, and therefore, as an investment bank, we saw it fit to stand in the gap, and we got the license by CMA as a result of the CMA Online Forex Regulations of 2017. I understand some with some key figures, when they lost their funds, this end to be pushed, and this is how it came to be. And when we applied the license, many applied, of course, but only SIB managed to meet the stringent regulations that were set in place by CMA to be able to run this kind of fund. Because if Kenyans were going ahead and investing in an unregulated market, it meant Kenyans were thirsty for alternative investments, and therefore, Mansa X gives you an opportunity to diversify your current portfolio from traditional asset classes. Say you're used to doing real estate. If you have cash, you put it in a fixed deposit. If there's a bond offer, you just buy bonds or T-bills, that's it. Your average return maybe is 9 to 11% or thereabout, or even put in money market fund or equity fund or bond fund, and that's it. So it may not be possible to realize a return of 24% with just those asset classes. Therefore, it calls for you to diversify your portfolio, and this is where Mansa X comes in. Mansa X is a diversification tool by itself based on the asset classes that is actually trades in. You're talking about currencies. There has been a lot of misconception when people just talk about Forex. They only talk about ordinary currencies. They just know it is only currencies. But just know that with Mansa X, will give you exposure now to be able to trade in gold. Not the actual gold, guys, we call them CFDs, contracts for difference. Silver, palladium, and platinum. Commodities like oil, natural gas, coffee, wine, global stock indices. You have hard time saying, I want to invest in S&P 500 as an individual. The minimum requirements there will really hard to reach. And therefore, through Mansa X, you can be able to participate in those global markets. When you've invested in Mansa X, when you're watching Bloomberg, you feel part and parcel. You know what is actually happening. We also pick single stocks, carefully selected single stocks like Netflix, Amazon, Tesla, Zoom. You know the story of Tesla. Like in 2019, they bust their targets. They bust their targets, and if you check their prices, their stock prices right now, they're just crazy. Look at Zoom. Zoom actually stood in for the airlines. Basically, business travel. Zoom has taken care of that, and therefore you ought to be very proactive in the way you manage your portfolio and take advantage of emerging trends and run with it. Knowledge, for example, even in learning itself, you realize that what you know 2 years ago is still, it's expired. You have to keep learning, continuous learning, get to understand what are the trends, what is happening. And those front runners, people who are very able to adapt very fast, of course, with the guidance of a reputable institution like Standard Investment Bank, you're able now to participate and be at the forefront of being able to take advantage of these global opportunities at the comfort of your home. So that's on the regulation, and these are the major fund features. We charge you 0% initial fee, and there is no redemption fee, of course, at the exit of the funds. We only charge a small 5% annual management fee that is prorated over 365 days. Yeah, the minimum investment is 250,000. But as I said, what should you invest as minimum in a fund like this? Look at 10, 15, or even 20% of your current investment portfolio. Get it into global markets and see how it compares with the 75% of your other asset classes. Yeah. So don't just buy a product like this bottle of water you bought at 250 and that's it. So you should look at your investment goals. And that's, I will repeat, our financial advisors are able now to sit down with you and guide you through and look at your entire investment portfolio and ask yourself, the last 5 years, how much have I been making from all these asset classes combined? What is my net worth now? And what was my net worth 5 years ago? Yeah. And when you do projections with a fund like Mansa X, if you just do 2 years projection, you'll be able to see. The fund has been, since inception, the inception of the fund was January 2019. Yeah. And it has performed exceptionally well. I think I skipped the 10% performance fee in the area. Thank you, Rosella, for this recap. The performance fee, if we give you a return above 25%, we have set ourselves a very high hurdle rate. In the market, I know you know there's a fund somewhere with a hurdle rate of 12%. That's a very small hurdle rate, which means you start sharing profits the moment they give you anything above 12%. For us, it is 25%. That's above 25%. What this one means, if we give you a return of, for example, 30%, we are going to charge you 10% of only 5%, not the entire fund. Yeah, this is to set high levels of performance. And our goal is to actually give you a return above 25%. That will mean more revenue even to us. And I'm more satisfied and happy clients with the performance of the fund. So that's how the performance fee works. Some claim that performance fee is very high, the management fee is very high. If you look at the global funds, some will charge you like 3%. Yeah, they charge you 3% management fee. But you look at performance fee, they will charge you like 20%. And their handle rate is nowhere near the 25% that we are giving you. Yeah, so someone can argue, if I go to these other funds, look at all the global funds, just Google management fee for most of the funds. You'll see even some giving you 2%. But the performance fee is the one they make appealing because they set a very low handle rate. Yeah. So we have been able to realize a return of 24%. Others as Q1 2020. As I said, the report for Q2 is yet to be compiled and generated as a fact sheet. So we recommend a minimum investment period of 6 months. Yeah. Anytime you are getting into an investment, yeah, ask yourself, what are my current liquidity needs? Immediate, short-term, medium-term, or long-term. Yeah. So the good thing about this fund, even if you have immediate liquidity needs, yeah, you still be able to invest in the fund and get a good return. But we only recommend like 6 months period for you to see something meaningful. Yeah. But if your funds that you need to use in 2 weeks or 3 weeks time, of course that better remain in a current account or money market fund. Yeah, some will squeeze some few shillings there. Yeah. And we don't the returns gained. I'm trying to discern questions that will be asked. The returns gained from this investment are referred to as capital gains. Yeah, so there is no exposure to CGT, capital gains tax. But we always advise you to talk to your tax advisor so that they can be able to guide you, talk to a tax expert. But just know these returns, these are considered capital markets. This is a capital market product, and therefore the capital gains are not taxed as an individual. But for the company, you have to actually consult if you invest as a corporate investor.
All right.
So, yeah.
Okay, as we continue, there's a question from Catherine. How often do you issue statements? I think it had been answered. It's on a quarterly basis, yes?
Yeah. And by quarterly basis, we mean by the anniversary of your investments. For example, if you put in February, March, April, you get your statement in May every 3 months based on your entry. when you enter the fund. Not the calendar year. We don't look at the calendar year. We look at your investment anniversary. If you put in January, you get it in March. You actually go with the calendar year. If you put in February, you actually set it with a month. So every 3 months of your investment, you'll be able to get a statement. Again, this is not something you put and then tomorrow you are checking the balance, because sometimes those are some of the things that if an investor, yes, we want you to get a very good return. Anybody who has invested in equity fund, you know very well what happens. You put in equity fund. Okay, I've been in financial services and advisory for the last 10 years. And my first few experiences was the first fund I interacted with was equity fund and balance fund and money market fund. And this client who came and put in some money, around 16 million in equity funds. And then a week later, they checked their statement. It was negative 6 million. Yeah, the guy almost shot me. But in his portfolio, in his profile, we had looked at 3 to 5 years. So when it came to understand, actually, he never even bothered to look at those statements. And actually, the fund actually grew. Yeah, it really grew and it got some very good return. So I know there is that need. The Kenyan investor want to see what is happening there now and now. At least give it at least 3 months. At least 3 months. If you don't need the money, put it at least for 3 months. There are FDRs you put even for 6 months, isn't it? Or even 9 months. Do you keep checking the bank balance? Yeah, when you put it in a fixed. So that's what we recommend, because the nature of the fund, it is very dynamic. The asset classes we had yesterday are not the same ones we have today. Of course, a certain element is maintained, but the others that keep changing. For example, the currency pairs. You may find this currency pair is doing so well, in the next 3 days you're not in it. You exited because of trading strategy. You've picked another one. There's some news. Trump has tweeted and said this, and oil is tumbling. Things like that. So it is very dynamic and requires a lot of active management. Yeah.
There's another question from same Catherine. Are there any contractual documents you sign with an investor? I think yes, Catherine. Don't go into any investments. Don't undertake any investments without signing contractual documents. But Victor,
actually, maybe to add on that, what you basically open is you open an investment account, yeah. And the good thing about this is not like a contract that is self-serving. It's not a self-serving contract you're getting into, and you're not tying you to a term like 10 years. Put this one for 5 years, and that's it. Of course, you just open an account with us. We take you through the fund. You agree to the terms, and we're good to go. Yeah. But it's not complicated terms and with thousands of pages of contracts that are contradicting. It is very simple and very very agile, but taking care of the basics, taking care of the very basics to make sure that you're not exposed as an investor.
Okay. And to add on that question, Victor, kindly expound whether you can sign up online.
Yeah.
And you can be able to view your statements online as well.
Okay. On that bit of being able to sign online, currently it is semi-online. And what I mean by semi-online, we are sending you application forms, which you can use, for example, PDF, Adobe PDF, fill and sign, and be able to fill the document and send it back on email. Or you can print it, fill or sign, and fill the forms and then scan back. However, we are launching an online platform, a mobile app, a web app basically, to be able now to input all your KYC, you fill all your data there, capture everything, and then it comes to an end. Upon verification of all the KYC, then you're able to fund your account, and then you'll be able now to monitor your fund as it progresses. You can actually log in, we'll give you a portal, you can log in and see how your fund is performing in the spirit of transparency. So it is in the works, but at the moment, we are giving the quarterly statements or the quarterly updates, and you can actually receive the documents via email, fill, and then scan back and we're good to go.
Okay.
Yeah.
There's a question from Martin.
Yeah.
Do I have to trade myself?
Do you have to?
Trade myself.
In this fund, there's no opportunity for you to trade for yourself. This is a discretionary fund. This is a collective investment scheme. Yeah, that's why we have the money manager license to be able to engage the public, educate them, and then they're able to invest with. We now run the fund on their behalf. If you want to trade yourself, there are so many outcrops out there, but there are only three major dealing entities that are licensed. There is EGM, Scope Markets, and Pepperstone. So don't take any other platform. If you want to do it your own way, proprietary trading, you want to trade only on yourself. And the limitations you have there are maybe a few asset classes, and then a lot of exposure to risk. And then it requires a lot of technical expertise actually to be able to master these markets. It takes a lot of years of experience. It is not something that you can't learn. You can learn, and it will take you time. What I don't want you to do is to gamble with your children's education, your home fund, or something like that by just trading. But you can start do paper trading and on those kind of things. But here we don't give you that platform to trade for yourself. We run a collective investment scheme. You take advantage of economies of scale, a large fund, more purchasing power, more profitable trades, and that's how you're able to get such a good return. And then, of course, the aspect of diversification in all the asset classes that I put that in the previous slide. Yeah.
Okay.
Yeah, this one. So if you go there to trade for yourself, you may not be able to benefit from all these asset classes. But our license enables now us to be able to get these kind of asset classes.
Okay. And you have mentioned that we can look at the performances on which platforms? Like performance of the Forex market.
How the Forex markets are performing and everything. There are various sites which I can even mention. There's investing.com. There is FX Daily. There are various multiple, even business news outlets like Bloomberg, MSNBC, CNN Business. Yeah, even locally here we have, we normally do a commentary on Business Daily. You see a writer called Tim Janot. We have a team here that actually writes on global markets, and you're able to access information. Even on our website, of course, and our social media links, we share a lot of information in terms of what is happening in the markets and what is expected and what is our view and what is our stand in those markets.
Okay.
If you look at, if you're able to access that asset, in February, our team really looked at gold and then looked at and oil, and all their predictions came through. And those predictions were not just thinking, it was technical analysis that was done, and it panned out very well.
Okay. There's a question from Michelle. In the event that your investment goes negative, are you as an investor required to pay the deficit? I think as the investment manager.
Mm-hmm.
I don't know,
So,
Michelle, if was that the meaning of the question?
If
sorry, you and the investor, you or the investor, is it the person being told to pay the deficit, or what will the investment company give me, like a percentage, or is that gone?
Yeah, Michelle, I would want to answer that question this way. Our biggest worry at Mansa X is the moment we are not able to give you a return above the market average. If we give you just like the market returns, that's our biggest worry. It's actually not actually you losing your investment. Yeah. So our conservative trading methodology ensures that we are not in the lines of take. That's why I talked about leverage and how we use leverage and how we use hedging against market fluctuations and and those kind of risks to ensure that we don't expose the fund too much. Yeah. So that one should not be your big worry, like you're going to lose and then you have again going to pay something else. Yeah, we have stop loss mechanisms. Yeah, if we say the fund should not lose more than 1%, CMA says it can lose even 10%. So we cannot lose them more than 1%. That is our internal rules. Every other fund has got their own strategy, but as we adopted a conservative trading mechanism and give a consistent return over time, year by year. The fluctuations may be there amongst quarters, yes, like you can see in our fact sheet. There may be those fluctuations, but at the end of the year, when you're doing the average, if you look at like last year's performance or the last 5 quarters, we have investors who have made even over 30%, others even 47%, yeah, depending on when they entered and they exited. So when you talk about 24%, the worst it can get, maybe we give you the market return of maybe 14%. That is what we are looking at as a fund.
Okay.
Yeah.
Okay. So you have a ceiling, which is 25%, and you have a floor, which is 14%.
The 25% is not a ceiling per se. We just set our own, like a benchmark. Like we are saying, if we give you a return above 25%, we want to start our profit sharing. So that's a high, it's a benefit to the investor, because I say there are some fund managers who give you a handle rate of 12%. That one means anything above that return, your profit sharing, as we have set it very high, very high. Yeah. Yeah.
All right. I got into the meeting late. This percentage returns are yearly, or what is the term?
Yeah, the return is per annum. It is per annum.
But just to just to clarify, as Victor had said earlier, it's a capital gain, not an interest rate. Yeah. So it's
these are capital gains. Yes. The returns are referred as capital gains. They are capital gains because this is considered a capital markets product. When talk about stock indices, single stocks, yeah.
Okay. And to add on to that, Victor, could you explain about the tax again? What tax are you supposed to file for? You're supposed to file for capital gain tax, or is it a tax-free product?
When they are declared as capital gains, there is no taxation for capital gains. You don't pay capital gains tax. There is no taxation on capital gains. But when you're investing as a corporate, you should be able to consult a tax consultant to guide you in terms of how you're going to, because at the fund level, we pay our taxation at the fund level, but we don't pass that one out to the investor. Not pass that to the investor. The return you get from Mansa X are referred to as capital gains, and there is no CGT unless they started charging it today. As the last time I checked, we're not being charged. I know it's a big issue now that people are filing for their returns.
Their returns, yeah.
For corporates, please speak to your tax consultant.
What do you mean by capital gains? If I can try and answer it, Catherine, more like from a layman's perspective, when you buy something at a low price and then you sell it at a high price, so capital gains is the profit that you make for selling. So if I bought it at maybe 50 million. Please.
Sorry.
Okay.
Some people in the same room, so 2 people in the same room.
Yeah.
You can use the same one on audio. Yeah. Sorry. So with capital gain, what do we mean by capital gains? These gains you get from when you trade in the capital markets. Yeah. There's equity capital markets and debt capital markets. Yeah. So whatever the returns you get from that is not basically taxed. It's considered as a capital markets product. So Mansa X, that's how it is classified.
Okay.
And if there was any issue of taxation, of course, you could really pass out very fast. We will not be having a discussion of whether it's taxed or not.
Okay. What is the risk for an investor losing their money? Is the fund insured?
The insurance of the fund is in our technical expertise and the years of experience the team has and our trading strategy. That's the insurance of the fund. Remember, SIB has been in business for 25 years, very strong in the corporate world, running, doing mergers, acquisitions, takeovers, LBOs for companies. Yeah. And it has built a very strong reputation. And the years of experience, if the chairman himself was chairman of NSE, yeah, there's another director also who was also chairman of NSE. There's a lot of experience, yeah. Job Kiumba, yeah, and James Wambulu, the executive directors, they have a lot of experience in the markets, and they understand how the markets actually perform, and therefore we cannot gamble and throw away a repetition of actually a transactional background of 260 billion. Yeah, even the largest IPO, maybe the Safaricom IPO, was done by Standard Investment Bank. So your fund is your investment is in very safe hands when it comes to investment. Yeah, so there's no you should not worry about losing your money in terms of your money was mismanaged. Yeah, if it was anything that could not be controlled by anybody, maybe that is a kind of risk. They can act of God. Yeah, uh, 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 we are all wiped out of the face of the earth. Yeah, or something like that. But I'm not saying that things cannot happen. But to make sure, what differentiates us from every other fund manager is our ability now to manage our risks. Actually, our team takes emphasis. They say we don't care how high the market or the returns go. Our worry is managing the downside risk. Yeah, managing the downside risk. That is where the company actually has put the fund manager or the portfolio manager has put a lot of emphasis on. Our portfolio manager is actually a national guy. For those who have subscribed, we'll be able to share with you a lot more about the fund and introduce basically the team and that actually manages the fund.
Right. I don't know whether there is any other questions. Anyone? I hope, Catherine, you've been answered. CEO, Michelle, Martin. All right. Oh, what is the cost of pulling out?
We don't charge redemption. We don't. There's no redemption fee for exiting the fund.
And how easy is it to exit? And how often can you just get in, and after 6 months, because there's the 6 months recommended period of investment?
Yeah, upon attaining the investment period that you so desire, you just send a mandate on email, and within 48 hours, we're able to fund your account. And you can do a partial withdrawal. You can just withdraw the interest. You can withdraw the capital and the interest. Yeah. So there's that flexibility. Yeah.
Okay.
Yeah, and there's no charge. We don't charge you for that.
Okay.
Yeah.
All right. I hope everybody has been answered. Thank you so much, Victor, for joining us today.
Thank you.
And taking us through Mansa X. I'm sure we have answered a few questions that we had also on our side, and we might have people converting. Feel free to reach out to us for any questions that you may have. We will put you in touch with SIB Capital. They will also take you through the whole process of investments on their side. We will have another training next week. We shall send out the links before. And thank you so much for joining us. Victor?
Thank you. Thank you so much. And we really appreciate your time. You're welcome to SIB anytime. Come and learn more about what we do. Our team of financial advisors will be able to guide you through the entire investment journey and answer most of those questions. You can even come and meet our portfolio management team and ask them all those questions you want to ask, and any other turnkey solutions you might want done in terms of alternative investments. Our team is well able to guide you through. Thank you so much for your time.
All right. Your office is located on at
You're located along Kenyatta Avenue, JQuat Towers, the former ICA building on 16th floor. The entire floor. Right. That's where we sit. Yeah.
Okay.
Thank you,
Asante
guys.
sana.
Okay. Bye-bye.
You are free to leave the presentation. Asanteni sana. We shall share the presentation at the end of the day. Thank you.